get ready to embark on an economic journey as we unveil the heartbeats of the Rwandan business landscape. This is the Business Age, your front row seat to the economic renaissance of the land of 1,000 hills. Join us as we traverse the bustling markets of Kigali, delve into the success stories of Rwandan entrepreneurs, and explore the dynamic forces shaping the nation's economy. From the boardrooms to the street vendors, we'll bring you the voices of the visionaries and the minds behind Rwanda's economic evolution. Discover the fusion of tradition and technology, witness the agricultural innovations transforming rural communities, and explore the cutting-edge innovations propelling Rwanda into a new era of economic prosperity. From the city lights to the rural landscapes, every business is a story waiting to be told. Hello there. Thank you so much for tuning in to today's episode of The Business Age. Financial inclusion means ensuring that individuals and businesses have access to affordable financial products and services regardless of their income, location, or social standing. On today's episode of The Business Age, we speak to Valens Chimenyi, Director of Financial Sector Development and Inclusion Department at the National Bank of Rwanda, to know efforts put in place to bridge this gap. You'll be with me, Naringwa Fiona Mothoni. Thank you so much, Mr. Chimenyi, for making time to speak to us. We really appreciate it. We'll be looking at financial inclusion. We'll start by understanding what has been achieved, where we are today, what needs to be done in order for the gaps to be bridged. As we start, give us an overview. When we talk about financial inclusion in Rwanda, where are we currently?
Thank you, Fiona, for having me. Maybe let me start by providing a definition of financial inclusion. We define financial inclusion as access and usage of affordable financial services by all people and businesses. When I say by all people and businesses, it includes even micro and small businesses. We've made tremendous progress as a country for the last 16 years, because we first did the FinScope survey that measures the level of financial inclusion in 2008, and the level of formal financial inclusion, that's people, adults that access and use financial services from regulated financial institutions, were at 21%. And last year, 2024, that number increased to 92%. So that's a tremendous progress. But then as policymakers, we try to understand, to digest this level of financial inclusion. And what we observe is that we've made tremendous progress on access. That's one element of financial inclusion. But there is another element of usage. Because there is access, thanks to mobile money, now very many Rwandans have at least an account. It can be a bank account, a SAC account, or a mobile wallet. So now the second level, the second phase of financial inclusion that actually we are going to put more efforts is on the usage. Because ultimately that's what transforms people's lives. People need to borrow, people need to save, to invest, expand their businesses, innovate, and create jobs and transform their lives. So that's the next generation of financial inclusion that we want.
Yeah. And then when you're looking at financial inclusion, looking at the data, looking at these other innovative platforms that have also come in to bridge the gap, also reaching the end users, especially in the rural parts of the country. Now, someone will look at, on the other end, on financial literacy, or even looking at the variety of product offerings that we have on the market. How can you say the Central Bank of Rwanda, how much effort or what efforts needs to be done for us to see an increased innovation of the products as well as the services being provided, and looking at the gaps currently, the limited reach? Any particular group of people that we still need to target?
Well, financial inclusion, I always tell people, we used to point fingers at financial institutions that you're not doing enough, but benchmarking and try to read and try to understand financial inclusion, we realize that actually financial inclusion needs a coordinated effort. It's a coordinated effort and needs interventions from different players, because financial markets are comprised of very many players. The first player, people and businesses. Then the financial service providers that actually do financial intermediation. The money they lend, they get it from people. Then the other player is the regulator. You have the people and businesses, you have the financial service provider, you have now the regulator putting in place standards, and then the government providing public infrastructures. So if for a good financial inclusion and effective financial inclusion, we realize that actually the interventions across all the stakeholders that I just mentioned. And now on the innovative products that you just mentioned, indeed, there's need for innovative products because people need financial services, and I always tell financial service providers that one indicator as to why we have room to grow is the existence of what we call bank rambere. Bank rambere, people borrow in the informal sector, they are charged very high interest rates and pay back, and there is a borrowing need, and maybe some products don't meet their needs. So how do we try to understand the needs of people? So a key enabler, a key ingredient in understanding the needs of people is data. And one barrier to financial inclusion is something we call information asymmetry. Information asymmetry is, to explain it to you, is that these lenders have no information on the borrowers, and the money they are lending is money for people. Central bank, we're in charge of financial stability. At one point, we were telling the lenders, give money where you think to, be paid back. And so deploy money where you think it's a very good project that, you have the returns and, be able to pay back the depositors. At the same time, we wear a financial inclusion hat. We are saying you're not doing enough financial intermediation, lend enough. But we are careful in saying that. We don't say that just lend, because that was actually the main trigger of the global financial crisis. Telling lenders to lend, have lax lending standards and just lend, because ultimately if the projects where they lend to don't pay back, then you have a financial crisis. It's going to stop lending forever. So we are very careful in terms of the interventions we make and advise in terms of unlocking and driving financial inclusion. And one thing that we are addressing in partnership with government is addressing this issue of asymmetric information. The lenders have no information to who they are lending to. And this is due to some informality of the economy, and this we are trying to address thanks to the digitization of the economy. There's data footprints. You're talking about people, lenders, getting data from CRB, and CRB is about a database of people who have borrowed before and been able to pay back. But there are people who have never borrowed, but have businesses and they have cash flows. They have been using mobile money. These are women selling fruits. There's cash flow ongoing on their mobile wallet. So that's data that is not captured. So the challenge we are giving ourselves, the regulator working together with other government players, how do we tap into these digital footprints, the data, and now work with the lenders, because this is what we call a data public good. When there's a word public, there's government that follows it. So you can't ask one financial institution to provide this data, to address this asymmetric information and provide data. So there has to come a public entity like the regulator to bring together this database and enable the sharing of data. Now the lenders can innovate, because if you're developing a very innovative product, you need to understand, is it innovative enough? Is it what people want? So what people want can be got from the data. What you want, the restaurants you like, can be uncovered by tracking, Fiona, which restaurants you've been going to, and that's you. So the definition of what people want lies in the data. So how do we unlock this data, bring it together, enable data sharing? And now the lenders will be able to use this data, develop insights from it, know what people want, and lend. So that's one thing that we are working on. Of course, along with many other things like financial education, addressing the illiteracy aspect. But asymmetric information is very key, and we are trying to address it.
And when you say doing a market study, for the lenders to even understand the market, to be better positioned to provide solutions what they need. I'm guessing that's one of the objectives in which the Central Bank of Rwanda went ahead and launched the financial inclusion dashboard. Maybe take us through it. What does it entail?
Well, the dashboard that you mentioned that we just launched, basically the issue of asymmetric information, lack of data, we realized that actually that this was a challenge 7 years ago. We realized that we have a financial inclusion mandate driving access, but also meaningful usage. And now we realize that actually to achieve meaningful usage, financial institutions need to design people-centric products that meet people's needs. For example, insurance. People face risks, but how do you design products that meet people's needs, the risks that people face on a day-to-day basis? So that's why we sat back and we deployed a soup tech solution that's using technology. It's a technology that now enables us to collect data from different financial service providers, getting it on a more frequent basis, and being able to aggregate it. First of all, clean it, validate it, aggregate it, and then send it back to the financial service providers, even regulators and policymakers, to use it in designing products, financial products, to use it in evaluating their products, even policymakers to use it in actually designing policies or reviewing their policies, or actually reviewing whether actually there is impact in the policies that they're deploying. So that was the overall aim of deploying this electronic data warehouse. Now, for the last 7 years, we've been trying to clean data. Of course, there's installing a system, technology, and now data starts coming in, but data doesn't come in. It's like plumbing. You do plumbing, then water starts coming in, but water is not clean. Then you have to clean data. So we've been cleaning data, working with financial service providers, validating it. So we came to a level where we are satisfied with the quality of data. And now we developed a dashboard that aggregates the granular data that is coming through from financial service providers with clear insights on financial inclusion. For example, previously we used to measure financial inclusion every 4 years. We could do a survey together with our partners, Access to Finance Rwanda, Minicofin, and NISR, to know the level of financial inclusion every 4 years. But in between, there are policies to be made, policies to be reviewed, financial products to be designed and reviewed. So we needed high frequent data. So this dashboard that we just launched, it provides us that data. Every week, we are able to understand the level of financial inclusion in Rwanda. People with transaction account, people with savings, people with credit. And we are able to get it by gender, by age, by location. I was telling mayors in the room that actually now you can sit in your district and know the level of financial inclusion in your district, and actually know women in your district that have access and are able to use financial services. So that's the beauty of this. It's very high frequent, and being able to support you in their decision that financial institutions make, but even policymakers. So that's the beauty of it, being high frequent. But this won't stop us from doing the FinScope, because FinScope captures the demand side of the equation. Financial inclusion is about lenders, the supply side, those that provide lending products, credit products, but also it's about the people, the businesses that borrow. The challenges of financial inclusion is both way, cuts both way. You can deploy good products, but if people are illiterate, then they won't use these products. So FinScope will be very good in actually capturing the demand side, dynamics. So a combination of FinScope and this high frequent dashboard, it gives policymakers with very good data, high frequent data, to make decisions. So that's the dashboard that we launched.
When you talk about having data updated on a regular basis, you've mentioned weekly, you can get real-time data. What are the metrics? You've touched briefly on gender, but what are the metrics and how accurate and reliable will this be for it to be constantly updated?
Well, I have to say data is accurate. Actually, we didn't try to rush deploying this dashboard when we're not comfortable with the quality of data that we have. But I have to say, actually, at a tune of 90%, we are sure and happy of the data. For example, we try to compare the outcomes of this dashboard and the FinScope. And actually, the difference is justifiable by the difference of the methodology. So we are happy of the data. It was tested, and even 90%, the challenge we are giving to financial service providers today is actually we have to clean it. 90% is not a benchmark. We have to clean it to be 100% pure and good quality. And you know, the products that I was talking about, you know, it's savings. You can know how many people are saving in the youth, by age, by gender, by location. So, and insurance products, pension, yeah, everything.
As you said earlier, data is the new gold. Data runs almost all sectors if we're thinking about development and advancement. How do you envision this tool that has just been given to the public? How do you envision whether it's policymakers or FinTech players or financial institutions really using it to innovate in according to the public needs?
Well, it's one thing to have a solution, of course, a solution that is having a challenge to address. You know, it's very absurd to have a solution and start looking for a challenge it's going to solve. But for us, we knew the challenges that this solution, the dashboard, is going to solve. So now the onus is on us, the policymakers, to use it, but also the financial service providers to use it. And we didn't deploy it out of the blue. Of course, we've been hearing, you know, the demands from the financial service providers who've been providing you with data. I, bank so and so, have given you my data, but I want you to give me an aggregated data to create an insights into me designing my product. So I'm very optimistic that they are going to use it, be it policymakers, be it, you know, financial service providers, even the central bank. I mean, we are the custodians of this product, but we already started using it in actually designing our financial, you know, education interventions. For example, knowing which districts to focus our financial education. I won't mention districts here, but there are like 2 districts where now we're focusing our financial literacy, thanks because of the data, because we see that's where the problem is. So data is going to be very important to policymakers, to financial service providers, and I have no doubt that actually they are going to use it.
The country is now working towards achieving the National Strategy for Transformation 2. How does this align with the vision? And when you think big and dream of a financially included country, can we put a year to it? When do you see that happening?
Yeah, one example is actually our NST2, the targets that, you know, taking Rwanda where they deserve to be, a good life. NST targets are premised on domestic financing. At least I think 70% of domestic financing is going to come from financial sector intermediation, our local financial institutions. And that speaks a lot in terms of how do we unlock this domestic intermediation and financing. And data is very important. Data is very important. And so once you have this information asymmetry issue addressed, of course, I can't say the dashboard is going to solve the data issues, information asymmetry issues. We have more projects in the pipeline that are going to in the same direction of addressing this information asymmetry challenge. But addressing the information asymmetry, it bridges the gap between the lenders and the borrowers. The lenders understand more the needs of the borrowers, but also they understand on who to lend to. We always say financial inclusion is about lending, but financial institutions have got also a mandate of deploying capital on behalf of the economy. I mean, deploying capital where it's going to be productive. So data is going to be very important in terms of unlocking domestic financing and enabling us as a country to realize, you know, the development goals as embodied in NST2. Yeah.
I mean, that leads me to the element of data in itself is sensitive. Now, when it comes to financial data, it needs to be protected at all costs. We are at a time where cyber attacks are constantly happening. We're at a time where data privacy as well as security is one of the key concerns. Talk to us about data protection as well as if anyone can access it, or how do you protect the information?
Of course, that's a good question, because data sharing and data protection, it depends on where you're coming from. It can be a conflicting goals, but it depends on the objective that you want. We have a data protection law as a country, and we have a national cybersecurity authority with clear standards on how we protect our data, clear certificates on who the data controllers, on who owns data and how they use data, and the duties and obligations of a person owning data, other people's data, how to use it, and the need for people's providing consent on how the data is going to be used. So we are very cognizant of that. And for example, the dashboard that we just deployed, it does not show a name of so-and-so. It's anonymized data. It shows financial inclusion, for example, how many women access financial credit, for example, in Ngororero. It's women. And so it's aggregated at that level. But as we talk about the dashboard, there's what we call open finance or open data. It's around how do you support data sharing within the ecosystem, the financial sector. And again, within the overall aim of addressing the information asymmetry. Because democratizing data and enabling data to flow, it's going to unlock many things, including financing, and not in Rwanda, but globally. So open finance, open banking is a global thing. How do we guide the market to share data in a safe manner? Because you talk of data protection, but also there is cyber security. So we are very cognizant of that. And for example, in Rwanda, we just did a paper on the feasibility of open finance in Rwanda, and soon we'll be publishing our position paper, of course, on open banking, because open banking, this is the BNR and the sectors that we regulate. Our approach on actually democratizing on how data is shared across the financial institutions that we regulate and supervise. And we put this in 2 phases. In other countries, of course, the ideal for anyone who wants data would be mandating each institution to share data with FinTechs, third-party service providers, to whoever wants to use this data to design a product for you and me. But actually, the sector hasn't matured at that level where you mandate. For example, in the UK, they have mandated. So we've taken a phased approach whereby in the first phase, it's around voluntary data sharing. If you're a FinTech and you want data, you've established in Rwanda, you want data for a mobile money company or a bank or somewhere, it's going to be on a voluntary basis, but with clear standards. So our next homework, that's something we're working on, is setting standards on data sharing. How do you share standards? Observing the data protection law. So it's going to be like a 6-year phased approach as the system matures, as in terms of capacity, in terms of awareness. Even the consumers need to know their rights. For example, if we're talking about sharing data upon the consent of the data owner, you have to put in place mechanisms for providing that consent. So I think we have clear visibility on what's to be done in order to enforce open banking, but clearly for data protection purpose and cyber security, we've deliberately taken a phased approach, to consider those 2 elements, data protection and cyber security, but data sharing, very key.
Very key, and a lot is being put in place to ensure that it's still safe and secure. When we talk of data as well as financial inclusion, some might think it's limited to only one sector, but it expands and it will have a trickling down effect on the economy at large. Talk to us about how it will impact the economy at large, not just the particular sector.
Look, we need, first of all, we have to understand why do we have the financial sector? In the absence of the financial sector, We work for money, you work for money, there's a business that is making money. Idea, you would keep your money in your pocket, I keep my money in my pocket, then business so-and-so keeps the money in their coffer somewhere. But there is someone who needs money to invest. But there's someone who is not having any investment idea, who is having a surplus, let me just say. So without the financial institutions, it would take this person who has an investment idea to move around probably with a microphone saying, I have an investment need, who has a surplus, who has money that he's not willing to use, lend it to me, then I'll give it to you back with an interest. That's very cumbersome. But another thing, these people won't trust you because they don't know you. So that's how, without a financial institution, financial sector, it would become cumbersome for investment. People wouldn't invest. You have a very good investment idea, you invest, you create jobs, people get jobs, and that's how people develop. People get jobs, poverty reduction, and many more. Now, without financial institution, then there's that data flow, that financing flow wouldn't happen. So basically, there wouldn't be investment. So this financial institution, the financial sector, is supposed to be there, pool our savings. We trust these institutions because they are regulated by a central bank. A central bank is our eye there to regulate these institutions, ensure that they keep our money safely. And the trust we give the regulator is the trust we get our money and put it in a bank. So financial institutions are supposed to pool these resources, pool enough resources, not pull from a few. Pull from even micro businesses. That's why I tell financial service providers, if you're getting savings from only people probably in Kigali, the well-off, and maybe big companies and micro businesses are not banking with you, you've not taken up your own. You have to pull from as many people and business as possible, and you have to lend to as many people and business as possible. Of course, if you come and tell me, I can't lend to micro business because I don't have information about them, then you're taking us to the area problem. You're there to solve this problem. But I'm not contradicting myself. I think also as a government, as a regulator, we have to support this system in terms of addressing the information asymmetry issue. But the point that you raise is very key. I think financial system, lending, financial inclusion has a bigger role to play in terms of economic development, investment and growth.
Thank you so much. And before we wrap up, anything you feel is crucial to add to the conversation?
Yeah, it's my urges to financial service providers, to the policymakers to visit the BNR website, go to the financial inclusion dashboard, use it, generate insights that will enable you to generate, design products, inform your policy making, and let's drive, financial inclusion because it's very key for economic development and growth aspirations. Thank you, Fiona.
Thank you so much for that. And that wraps up today's conversation on the business age. There you have it. We've heard directly from the National Bank of Rwanda on some of the tools they are putting in place to be able to bridge the gaps in place for the country to achieve 100% financial inclusion. You're with me, Narengwa Fiona Mothoni. Until next time, it's bye for now.